Hi, this is James Shug with Westpac London's end of day report for Wednesday, March the 20th. Quite a bit of economic news to report today. Just most recently we've had the Federal Reserve announce that it's maintaining its $85 billion per month bond purchase program. The statement accompanying that announcement said that incoming data suggested that a return to moderate economic growth following the pause late last year was underway. Labour market conditions had shown some signs of improvement in recent months, but the unemployment rate remained elevated. Inflation was running somewhat below the committee's long-run objective. At the press conference, Fed Chairman Ben Bernanke said that the committee had judged that no adjustment to the bond buying program was necessary at the moment, although the flow rate of purchases could be adjusted over time. Most FOMC members in their latest forecasts anticipated the first rate rise to be in 2015, and that was unchanged from their previous forecast three months ago. On the UK data front, we saw a decent rise in employment, 131,000 in the 3 months to January. That was faster than the previous 3-month period, which saw just a 41,000 increase in jobs. Unemployment rate was steady at 7.8% in the latest 3-month period, down from over 8% earlier last year. The Bank of England minutes to their March meeting showed the 3 committee members, including the governor, voting for further asset purchases, but 6 of them saying no, so that's why policy remained unchanged. The budget for 2013 was announced by the Chancellor in the UK. That included a tweaked inflation remit for the Bank of England. The 2% target remains, but the BOE has scope now to provide some rates guidance, rather like the Fed does in the US. The budget growth forecasts were revised down. The growth forecast for this year, 2013, cut from 1.2% to 0.6%, so a halved growth rate there. That's actually pretty much in line with our forecast for the UK. Although their 2014 forecast, although it was cut back from 2% to 1.8%, our forecast is actually just 0.2% growth next year, and that's because we're much more bearish on the European economy. The Chancellor's expectation is that public debt in the UK will peak at 85% of GDP. It will start falling in 2017, 2018, so that's what, 4 years from now. On our forecast, it's probably going to take even longer than that before it starts coming back. Other bits and pieces on the data front, the Cypriot bailout, of course, we had Parliament yesterday in Cyprus reject the bailout plan, which included, of course, the bank deposit levy. There are reports coming through that the ECB, European Commission and IMF representatives and the Cypriot government haven't been able to reach agreement on a backup plan. Cypriot banks remain closed. They will remain closed until next week. Capital controls are being developed to try and prevent a run on the banks, although several of the banks are going to be shut down. None of this resolves the problem that Cyprus needs 17 billion euros to restore to cover the losses that the banks have made. I think it's about 75% of their loans have gone bad. Russian involvement in a possible solution to the issue there remains a possibility, but look, there isn't a solution that's possible, frankly, other than the debt being written off. Same for Greece, but European officials just haven't got there quite yet. In terms of market movements, actually, apart from the London market down 0.1% today, there are gains right across Europe. Bit of a rebound there, despite markets seem to like the fact that the deposit levy in Cyprus was blocked by the Cypriot Parliament, but there's still no solution, as I say, but markets don't seem to be perturbed by that today. So we've got, apart from that slight fall on the London market, the French market up 1.4%, the Germans are up 0.7%, Spain, Italy up between 1 and 2% today, and the Dow is up about 0.5% at the moment. It's just, well, it's at 14,530. Commodity markets, gold has come back a bit. It's down 0.4% at $1,605 an ounce. Oil prices are up 0.9%, $92.36 a barrel, and copper is up 1.2% today. Aussie dollar, it's been recovering somewhat. It's at just over 1.04 against the US dollar at the moment. That's about it for today. I'll be back again tomorrow when we may have a little bit more to report on Cyprus. Markets look like they're getting, working their way through the issue, but believe me, there's a lot more bad news to come out of Europe, we suspect, before too long. Okay, back with more tomorrow.